So why are all the roads leading to Oklahoma? Well, joining me now is Mark Snead, a research economist and director of OSU Center for Applied Economic Research. Well, I'll get right at it. Is Oklahoma recession-proof?
Well, Oklahoma is not recession-proof. No state really is, but I think the key point is as long as we have an energy boost, we will probably outperform the U.S. economy under most any conditions. But if the U.S. economy happens to fall into a deep recession, yes, it's absolutely quite possible that the state would also fall into a recession.
And energy definitely is a double-edged sword.
It is, under most conditions, you would rather be in an energy state when prices are high. There's no doubt about it. But you have this timing issue. When the rest of the nation is suffering, you tend to see the boost. And yet when you see the reversal, as we're seeing now as energy prices have fallen substantially in the past 2 months, it acts as a constraint on the state. So yes, it clearly is a double-edged sword.
What are the factors that we think we should watch over the coming year?
We are looking at two very distinct factors. It's the national housing market is the first factor, and it doesn't appear that there is a quick resolution in place. We know that these bankruptcies will extend well through this year and probably halfway into next year. So we're looking for the bottom in housing market activity. When that occurs, we know that there's a good chance that the overall economy, the financial system, all of these that are linked together can recover, and we probably will see a sharp change in economic conditions. The other thing we're looking for is energy prices. As we said, it's a double-edged sword, but at some point, high energy prices are not good for Oklahoma. They're not good for any state, energy or otherwise. And what we've learned, I think, is that below $100 oil, Oklahoma and most states can adjust to it. It might take 1 or 2 years to adjust to it, but we can handle that. The problem was that surge from 100 to 150. It was clear that it began to hurt consumers in a meaningful way, and it slowed economic activity. It stunned the national economy, and it has even stunned parts of Oklahoma. Tulsa's been hurt a little more than Oklahoma City. So we're watching those two things, housing and for another surge in energy prices.
Now, the last time we visited on the show, you said one area that was a welcome surprise was the strength in rural Oklahoma. Is it still the same way?
It is. It's a very good surprise. It's a sort of a complicated story. It is part energy, but that's mostly confined to the western part of the state. It's largely ag. There's a lot more agricultural activity. Again, that's largely the western part of the state, but it even goes beyond that. There's the tribal influence. The Indian nations and tribes, which are largely the eastern half of the state, are doing extremely well. They are adding jobs. They're large, growing governments and private entities. And in general, Oklahoma as a whole is experiencing strong in-migration from other states, and it's not just going to the metro areas.
Now, earlier in the show, we talked about the job loss on a national level. In some ways, are we maybe whistling in the dark thinking it couldn't happen here?
To some degree, you are exactly right. The point is we are outperforming the nation. We have been, but as the nation slows, we slow along with it, and at some point, it would probably take a deep recession, but at some point, the Oklahoma economy would probably begin to lose jobs as well.